Welcome back to our Changemaker Speaker Series. We are incredibly excited to have a visionary leader with us today, Everett Sands. Everett is the founder and CEO of Lendistry, and Lendistry is a very unique entity in that it is part CDFI, part FinTech, and CDFI is Community Development Financial Institution. So Everett, we're going to hop right into it. So tell us a little bit about where you grew up, and then give us the 50,000 foot view of how life led you to create Lendistry.
So I grew up as a youngster in DC. A little bit of history in my family. My grandfather was the first African-American to own a tailoring shop in the 1930s. He also had a trade school, and that trade school was to help war veterans. He had a bunch of Korean War buddies that were coming back from the war, and they were looking for jobs. And so he created a trade school to help out, teach them the trade of tailoring. And he's the first African-American to have a contract with the U.S. Army. He made the Korean War caps. And so if you can imagine the kind of family thing to do was to work at one of these tailoring shops. So I am not artsy. I can't do any tailoring, any stitching, anything like that. So I was the guy who swept the floor and worked the cash register. That's my claim to fame. I don't think they even put my picture on the wall. I think all my cousins and everybody else got their pictures on the wall, but not me. And growing up was cool. As you can imagine, living with a history of entrepreneurship. My mom was an entrepreneur, my dad was an entrepreneur, but my grandfather was kind of the patriarch of everything. And it's a story of wealth and loss, Nicole. I mean, he had 5 different locations, and unfortunately he got some bad advice in terms of access to capital and taxes. And so I kind of grew up in the story of celebrating the opportunity to sweep floors and work in a place that he worked and others worked, but also kind of grew up with the story of what if. What if he had gotten kind of the right advice for access to capital? And what if he was able to borrow the right money? And so that kind of led me and put a fire inside of me to kind of want to solve the question of what if. The truth is, when I went to school, I thought I was going to be a doctor. And then that kind of turned away because I was more interested in planning parties and doing things related to business. And so once I took econ and entrepreneurship, it led me right back into kind of this moment of thinking about entrepreneurship and thinking about my family. As I grew and as I went through different things, I went through a banking career, which had me sit on the board of a bank, first African-American bank in Maryland. Ended up creating a mortgage company, became a top 10 mid-Atlantic player. We sold it to another bank, which happened to be an African-American bank, also in Maryland. And then jumped ship and went to a national bank and worked in national bank on the East Coast and the West Coast, but always had a desire to be an entrepreneur. And so my last stop at that bank, I really got to see kind of the interaction between community banks and national banks. And even though my team was top 1% in LMI and top 1% in minority lending, and we were in the top 10% in terms of profitability, just always kind of had this desire to kind of go back and help those that might be like my grandfather. And so Lendistry was created really because it fit kind of 2 different things for me. One, when I was thinking about banks and try to help them kind of serve others. And the best way I would kind of define it is, in my banking career, and probably over the last 10 years, the definition of underserved has kind of evolved. I mean, it used to be when you said underserved, it was kind of a topic that was geared around race or gender or maybe even location. And I think recently with the consolidation of banks, it's been more of a conversation around operational efficiency has led individuals to be underserved. And so that's interesting for me. And then the second thing is, again, starting to look at some of these small businesses as if they were my grandfather, and think about how I can help them. And then the third thing, truthfully, is I'm a nerd, so I kind of like complex puzzles. And so I thought it'd be interesting to try to figure out, how to help kind of eradicate the word underserved. Like how could we do that? And so that's how Lendistry was formed, with kind of those thoughts in mind.
Love that. I love the family legacy that led you to this this journey of entrepreneurship. So I want to dig into that a little bit more. You talked about some of the hurdles that your grandfather faced with access to capital, being a Black entrepreneur. We know that those hurdles still exist. What are some of the things that are challenges for Black entrepreneurs in this day? And what's some advice that you would give those entrepreneurs to clear those hurdles?
So the first thing I think we need to think about is the capital deployment vehicles. Knowing that those who were originally serving these communities are not there anymore. right? So those $1 billion and below, $100 million and below banks don't exist. Who can step up and be the next capital deployers? And that's the way I look at Lendistry and how do we solve for that? When I think specifically about the individual entrepreneur, I think it's a combination of a couple of things. I think one, we've always taught the entrepreneurs to know A to Z, how to start the business, run the business, do everything in the business, et cetera. And a lot of the business owners are saying, look, I just want to make my widgets. I don't want to be involved in collections. In some industries, we've kind of embraced it, right? We said, look, the medical industry is bad at collections and it's okay. They can just keep doing their dentistry or their medical stuff. And we won't worry about the fact that 30% of their money is not collected. Well, I think we should try to solve for that, because if we could help them get 30% of their collections back, that could lead to tremendous wealth. And so you take that Black dentist, maybe he or she can open 2 locations or 3 locations or 4 locations. Now you're talking about job creation. Now you're talking about tax revenue. You're talking about all these different things that can really change a community. And then I think the third thing we need to really start to think about is education, right? And historically, as community-based institutions, we've kind of said, let's have a one-on-one meeting, right? And let's sit down and let's talk about your business. Well, sometimes it just doesn't work, right? I'm a single mother. I'm running my business 9 to 5. I'm taking care of my kids 5 to 9. Maybe I want to have dinner or have a little time to myself. And so maybe that's 9 to 11. And now at 11 o'clock p.m., I'm going to sit down and I'm going to start learning about my business. So what are the innovative ways we're starting to look at these things? Or we need to create innovative ways to start to look at how do we educate her at 11 o'clock p.m.? Because she's not sitting down with us one-on-one. She doesn't have the time. We shouldn't force her. And then I think equally as important, we have to recognize that if we don't create these ways, she might look at another type of lender, maybe a predatory lender or somebody that might not have that concern or deep-seated desire for her to succeed just because we want her to succeed. And I think that's kind of what we're seeing in the Black and African American community, is that we're not really meeting the business owner where they're at, and they're effectively out evolving us. Right, they're using tools and e-commerce and YouTube University and they're doing things, and we're not catching up with them in the financial industry to meet them where they're at. So I think those are some of the struggles that we're seeing with our Black and again other entrepreneurs that we're trying to work on and we're trying to solve for.
Yeah, that's really, really great detail on some of the systematic needs that remain for minority entrepreneurs, Black entrepreneurs in particular. Talk to us a little bit about how Lendistry is uniquely addressing those needs.
Yeah, so I think just to give you a little bit of, some color, right? So where we're sitting at in Lendistry, we're saying, look, we've got financial professionals, we've got technology professionals, we've got people who are past teachers, we've got past business owners. We're trying to bring everybody together and say, look, we need to create things that make sense for the business owner, culturally competent, in language. There's all these different things that we're thinking about how we kind of get there. And what really comes kind of top of mind for me is being, I guess, almost specific in how we treat the business. So what I mean by that is historically, we've kind of said, look, here's these generic things that every business owner needs to do. And we've kind of treated it like it's a silver bullet. We now know there's no silver bullet. And so what I mean by that is if you're a restaurateur coming through, and you're trying to learn about how to run a restaurant business, there are specific classes, there's specific education, there's actually specific financing that you need. And so what we're trying to do is we're trying to think about the user experiences that come in from a technology perspective, the user experience from an education perspective, and then how do we help engage you with people that maybe look like you, are in the same industry, and that you can relate to. Going back to the woman, like, let's have her be taught by another woman. Because the truth is that maybe that woman can relate to the woman on personal items as well as business items. And maybe that woman entrepreneur might even be more open to say, hey, let me tell you about something that happened at school today, but it affected me in my business life with my kids, right? And, and I think sometimes there's just some relatability that I think we need to be a little bit more conscious of as we think about the future. I think the other side of that is we've got to just kind of recognize that true systemic credit is lopsided. Right, we're trying to repair a history where, if you take places like Baltimore, where I used to be a leader, there were literally deed restrictions against African Americans owning houses, right? Or you take like the GI Bill, which didn't include certain minorities, including African American in certain parts of it, right? And so I think we got to look at some of these things and say, okay, kind of for decades here, we've kind of excluded people or not allowed them to have the runway that some entrepreneurs have. I mean, if you talk to an entrepreneur and they say they're starting a business, the most common thing they say is, well, I'm going to use 0% interest credit cards. I'm going to use my home equity, and I got friends and family. Well, the difference between having a home that your family has owned for 50 years and one that's owned for 5 is that's a completely different runway. And I think that gets some kind of systemic credit. So one of the things Lendistry is saying is, okay, we don't think we can repair the past, but what we can do is we can look at some future products and some future programs. And so what I think about is we're involved in things like State Small Business Credit Initiative. It's commonly termed SSBCI, but it's the state's version, and every state received money for this and or will receive a new allocation come here in April 2022. They will receive an allocation. And so the state has an opportunity to create an SBA-like program. But at the end of the day, what does it mean for an entrepreneur? It means that you might not necessarily have the collateral. You might not necessarily have the credit. And the state has a pot of money that can step in and say, hey, this pot of money, lender, you use this because this individual entrepreneur doesn't have the collateral requirements, the credit requirements, maybe the income requirements or something like that. And we're involved in those conversations and designing those programs and helping think about the allocation. And again, making sure that we're bringing mission-based and other organizations to the table to also participate in some of these programs.
That's phenomenal. I think widening the credit box a bit and supplementing some of those credit applications, it is the difference maker. And then the next time that borrower goes to borrow, their application looks more mainstream. And then the next time it's truly mainstream. And so that's the advancement that you want. And that's the great work that Lendistry is doing. So going back to what I mentioned in our opener is that Lendistry is both a CDFI and a fintech. The fintech being based on this proprietary underwriting platform that is phenomenal and allows you to have a lot of speed and create a lot of opportunity. Yeah. So as you grow, how do you continue with the mission that you just detailed just now? How do you continue to grow that mission and balance it with the growth of being sort of a technology company that is high growth? How do you balance those two?
You want to think about availability and accessibility. And so I think availability is, again, kind of using that term I used, the business is open, 9 to 5, and maybe they can do personal stuff from 5 to 9. I think you recognize that we have to be available from a basic standpoint, time. And so technology allows us to, first of all, be available 24/7. Give them the ability to apply for a grant, a loan, whatever it is that they might need, receive education, no matter what time. It could be a holiday, it could be the weekend, it could be, middle of the night. And what we've interestingly seen is that the data is showing us even more that it's not even actually 5 to 9, it's actually later that the small business owner is coming online, which is actually proving that point. I think the second thing is taking a look at data and saying, where's the customer actually getting stuck in the process, right? We now have the ability to see this person took 5 minutes to complete it, this person took 15 minutes, and where did they get stuck? And traditionally, you use this on marketing. You look at bounce rates and click-through rates, and you see where somebody lands on a page. Well, we're using this type of data to actually say, okay, well, wait, they're actually, this second page of the application, they're struggling with. So we've done things like create videos, usually 30-second, 60-second videos. It just walks an applicant through the various processes that they might go through so that they can understand and make the application better. And we've actually seen the results of things like that. And then I think the third thing is, as we start to think about innovative processes, look, traditional lending is exactly right to collect tax returns and bank statements and personal financial statements. But we now realize through tech, we can get a lot of that information, right? We can get the tax returns a different way. We can get the bank information through bank integration. We can see if the business is how it's done over the last 6 months, 12 months, 24 months, different things like that. And so that's allowing us to create innovative underwriting approaches. And you probably have seen that we've partnered with people like Amazon and others. And what that is doing is that's adding more data to the pot, because we're saying, okay, now we know what the success of that entrepreneur looks like. Let's add some more data to it and see if we can get even better and better and better. And then going back to what I said about the systemic credit model, now we can go to the state and say, hey, look, if you give us this credit enhancement, or you give us this opportunity to take some of your funds and infuse it into our process, now we can kind of shield ourselves from a risk perspective, and we can offer even more credit. And so constantly in the back of my mind and our leadership mind is, how do the good guys show up in a high quality way? And sometimes, again, it's meeting the customer where they're at. So we've been watching and saying, look, the customers are looking at these revenue-based products. Forget the interest rate, forget the term. We know that some of these things are bad. How do we, as the good guys, come in and meet the customer where they're at and start to think about innovative ways to just change the game and change the narrative?
So with this great team, share with us what you can about what's new and exciting for 2022. What are some of the things that we can look for coming from Lendistry and your team?
Yeah, so I think what you're going to look for is, as we start to really think about the small business owner, and the business reason, of course, is to get stickier and do more things with them and give them more information. But I think the intentionality and the mission side is, how do we think about really taking that business to the next level, leveraging the data that we're looking at, revenue, credit, different things, and really helping them? How do we think about, I mentioned kind of the business owner wanted to go from A to Z. How do we think about taking some of those things off their plate? And so we're looking at products where we might be able to help with accounts receivable and different things like that, all related to lending, all connected to lending. But those are some of the things that we're doing in a transformational way. I want to go back to the human capital. I think Lindistry is always trying to find the right team members and always bringing in the right team. And I just want to go back to it because I want to make sure that this message also gets out to any small business owners listening, because I think the evolution of the business is not only capital evolution, right? You borrow $100,000 and $1 million and 10 million, things like that. But what also happens is your team evolves. And so I think you'll see not only evolution at Lendistry in terms of our team, people growing and people getting educating and different things that we're going to be doing with them, but you'll see some change, right? You'll see some people that say, look, I just wanted to be at a startup, and Lendistry's gotten a little big, right? Big, little, right? And you'll see some other people who might say, look, Lendistry's growing at a certain level. We've got to, it's time for the next player. It's time for me to step aside and let somebody else come in. And I think when I first started on my small business journey, I looked at it as titles as opposed to individuals and titles. So if we hired a chief strategy officer, my thought would be the chief strategy officer would be here when we make $1 and when we make $100. And the truth is that the people start to evolve. And I think for our small business owners and our leaders, we've got to understand that. We got to understand, one, it's a good thing. We got to be, acceptable to change management. And we got to think of human capital and PACA as a real change agent, especially, we don't know what's going to happen with inflation and labor wage costs and different things like that. So I think it's important that the small business owners start to think about constant evolution of the team members and the human capital inside of the business. And Lendistry will be no different in 2022.
That's a phenomenal point, and I think it's our job and my job as I work with you and your team to continue to evolve with you. And I can tell you, we're running hard and fast to keep up with you every day. So, so just phenomenal work. Last question for you. Sure. Let's go back a little bit to your grandfather and that legacy. What would you say has been your most poignant moment at Lendistry, and one that your grandfather would really, really be proud of?
Yeah, so I think what I'm most proud of is also what keeps me up at night. We have done fairly well. We have hundreds of team members. We have deployed billions of dollars. And this past couple of years have been, some of our best years. I think what also keeps me up at night is that there's still a lot of people we can't get to, right? And there's still, we have partners that are states and counties and cities, and there's some that we still have to say no to for programs when we know we could be helping them deploy capital in the right way and administering it to the right people and the people who need it. And so I think I'm so excited that we've been able to grow and evolve. And then I've come into clear consciousness that there's still a lot more to do. And so that's what I'm most excited about, because it represents opportunity, but it also is a little bit of a nagging thing for me, because it's like how do we get there? How do we get there? And I think the definition again of underserved is kind of growing, right? And we're walking into an economy that will have about $10 trillion added to it, and forget the politics and what all that means. I mean, at the end of the day, what that means in underserved is, generally speaking, there's going to be a larger group, a larger gap that don't have access to capital. And so those are some of the things that we need to keep top of mind and think about solving for.
I love it. And so appreciative of the time today and the insight you've shared with us. And we're excited to see you grow and continue to do more and to have more impact. So Everett, thank you so much for being with us today and for the time.
Yeah, thanks, Nicole. Looking forward to seeing you soon.